In a year when many markets faltered, COL Financial managed to quietly defy the odds. The firm increased both its customer base and assets, ending 2025 with over 569,000 accounts, up nearly 3%, and pushing net equity past 123 billion pesos. Net inflows of 3.40 billion pesos showed that investors not only stayed, but trusted the platform with even more of their funds. Even in a challenging environment, retention was strong, and client engagement deepened, a promising signal for future growth. But while scale is on the rise, monetization has not kept pace. Consolidated revenues slipped 2%, reflecting the difficulty of earning more in a weak market, even with greater activity. Commission revenues grew over 11%, and fee income expanded robustly as clients diversified. Yet, COL's old reliance on interest income proved vulnerable. It dropped by more than 10% as margin lending softened and yields sank. Trade receivables fell, with investors borrowing less, a prudent move, but one that weighs on brokerage profitability. The story of COL in 2025 is one of careful progress and disciplined management. Net profit rose almost 6% to just over 514 million pesos, with solid returns on equity and healthy margins. Costs stayed under control, and the balance sheet remained resilient, over 9 billion pesos in cash and a capital adequacy that dwarfs regulatory requirements. Yet, a notable slice of profit came from a one-off gain, not recurring operations, reframing earnings quality for wary investors. Dividend prospects reflect this cautious optimism. Cash generation fell sharply, and while COL remains liquid, the board has yet to declare new dividends ahead of the annual meeting. Last year's payout signaled confidence, but repeating it, or exceeding it, may be less likely. The evidence points to continuity, not exuberance. For shareholders, this is a moment to appreciate COL's sturdy franchise, but to temper expectations on a richer payout. Growth and stability are real, but prudence, at least for now, will shape the dividend story.